or more.
Uh-huh.
And there's some minimum funding in a defined benefit plan. It's for the actuary to calculate.
Uh-huh.
But non-discrimination testing happens across the board in a variety of different issues, from the benefits that somebody has to what's called coverage. You have to cover a certain number of the employees. You can't set a plan up and just, you, Mr. Owner, you're it, and everybody else doesn't get to participate.
Right.
So there's that type of testing. The 401k test that people talk about. That's non-discrimination. Again, we compare how much the owners are putting in with how much the common law employees are putting in, and it has to fall within the ranges that the IRS puts in the regulations. Same thing with the match that goes in. Also, we had talked before about the class allocated plans, a way to contribute more for an owner and a lesser amount for the regular employees. That again, that test you have to pass is a non-discrimination test to make sure that you're not discriminating against the common law employees.
Right. So this isn't something you want to do yourself.
Not those types of things, no. I mean, in fact,
Yeah.
one thing in 401k plans is what's called a safe harbor plan.
Yeah.
And then you don't have to do the 401k
Yeah.
test or the match test potentially, depending on what safe harbor you use.
Yeah.
But again, there's a certain mandatory contribution that has to be put in, to buy yourself out of that test.
Right. Right.
So.
Yeah, which I've done. Okay. So
Yes, yes.
all right. So how do you're a third-party administrator.
Yeah, that's what I'm
And-
called, a third-party
Okay.
administrator.
So how does a company like yours help compared to plans administered by a brokerage company or families or funds and that sort of stuff?
Well, most of the plans that are set up, the company is the legal plan administrator. And then they would hire a third-party administrator to pretty much do most everything that's required to be done. Do the testing, decide on the eligibility of who's eligible to be in the plan, who's not. Do the distribution paperwork when it comes time for somebody to be paid out. Do the annual forms. Do participant statements. There's a lot of different things that have to be done. And if you're in a brokerage or family of funds, some of them will do parts of those. But pretty much you're on your own to make sure that it's being done right. And if you have a question, third-party administrator is someone that you can go to and ask a question about how does this work or how does that work. Maybe I'd like to change my plan so that it benefits people at a younger age or something like that. So pretty much third-party administrators there. I like to say it's somewhat like auto insurance. If you never get in a car accident, you never needed auto insurance. And I guess if you have a plan and you never get an audit, maybe you never needed somebody, whether you're doing it right or wrong, because nobody was able to tell. But third-party administrator is somebody that should be there to help you, get through everything and make sure it's right. And hopefully, as a responsible owner, you want to make sure that, one, you get your money at the end of the day and that your employees get what they're due because you've followed all the rules and made sure that there's no problems in the plan.
Yeah. I don't really have this as, well, excuse me, I guess we do. So we'll go ahead for our question here. So we'll talk a little bit, like to talk a little bit about what requirements that we have in the way of forms that need to be filed and so forth. And some people think, oh, I just need to file stuff with my income tax returns.
No.
So is that the case here? And what about due dates? Are they the same as income tax returns? So how does that work?
Well, for a qualified retirement plan, 401k, a profit sharing, or defined benefit plan, you have to file what's called a Form 5500. That's a multi-agency form. It's an Internal Revenue Service form, Department of Labor form, and if you're in certain defined benefit plans, it's a pension benefit guarantee, which is like an FDIC insurance fund for pensions. And that form has to be filed every year. The due dates are different, and generally they're after you file your income tax forms because there's certain things you have to take care of to even calculate what you're going to put in a plan and prepare things. So you really kind of have to get your business returns done and taken care of, then you can move on to the retirement plan. And I think at least in this case, the government kind of saw how that flows. Due dates for a Form 5500 is 7 months after the close of the plan year. So if you have a December year end, it's due by July 31st. You can go on extensions. You could use the extension of the company, or you can use an extension of the Form 5500 itself, and that takes it out to October 15th. In that form, it's an informational form. You're not turning in any income taxes. You're not getting any refunds back, but it is asking questions about what's happened in the plan during the year. How many participants do you have in the plan? How many joined? How many left? What kind of plan do you have? There's codes you have to fill out. It looks at the accounting of the plan. What was the beginning balances, the ending balances? How much contributions did you put in? One of the most important parts is on that same schedule is what are things invested in. And in our business, we kind of call them kick me boxes. Because if you answer yes to certain ones, you might get kicked with an audit. So, and they ask amounts that are in there, things about like how much real estate's in there. The IRS has audit parameters to see how much is in there. You know, did you commit a prohibited transaction? Did you do a transaction that's not allowed under the law? You're supposed to tell them about that, and that definitely would have them come calling. And if there's loans in the plan, you know, was there any defaults in the plan in those loans? Those types of things, a bunch of questions that they ask on that. So
okay, let's talk about for the moment about when plans need to actually have a financial audit. So they have to actually have a CPA firm go in and check out the internal accounting and so forth and give a report. So when do you have to have that?
If you have a plan that has more than 100 participants in it, then you have to have a certified audit done by a CPA, and it has to be done under the rules established by the Department of Labor, and they take it very, very seriously about making sure that's done proper and that they get their information properly. I've had a client on occasion not do it on time, and the Department of Labor wasn't very happy about it. So, yeah, so it's very important that that's done right. And I've been in seminars with representatives of the Department of Labor, and they tend to stress that point very well.
Now, there's another type of plan we haven't talked about a whole lot, but they require some special procedures and attention too, and that's the employee stock ownership plans, the ESOPs. And so let's talk a little bit about what are the requirements for those each year.
Well, an ESOP it's very similar to a profit sharing plan, except that it invests primarily in the stock of the owner. And because that it does that, if it's a privately held company, there has to be an independent third-party appraisal done of the value of the stock that's in the ESOP. And if it's publicly traded, of course, you can tell that that's on the market, and there are publicly traded ESOPs out there. A lot of companies that are publicly traded have ESOPs. But it's the kind of plan where employees can actually participate in the value and growth of the business that they work for. Provides an opportunity for them to get into the capital markets where they might not otherwise have that.
Okay, so believe it or not, we're about out of time.
Okay.
So we've done pretty well here. So thank you very much. Phil, thank you for being a guest on my show.
Thanks.
And maybe another time we can talk some more about plans. But meanwhile, hopefully you viewers have gotten some good ideas and some insights related to how retirement plans work for small businesses. So we'll see you next time on Financial Insider Weekly.